Modern finance is built on isolation. Banks operate within walled data silos, treating separation as a security measure. But this architecture prevents the creation of shared infrastructure, leaving energy trapped in disconnected pools. Because institutions cannot share a single verifiable state of reality, every cross-party transaction requires manual reconciliation. This friction forces settlement cycles to lag by 1 or 2 days, tying up trillions of dollars in global collateral, while internal ledgers wait to sync. This chart shows the aggregate cost of that isolation. When one corporate client interacts with 5 different banks, each institution repeats identical Know Your Customer and anti-money laundering checks. This redundancy contributes to a $50 billion annual tax on the global financial system. Decentralized finance offered a potential exit from this redundancy. By moving records to a public blockchain, DeFi achieved programmable money and instantaneous settlement, allowing trades to clear the moment they execute. However, the DeFi experiment revealed a different coordination failure. DeFi prioritized programmable money, assuming code is law replaced stable governance. This crisis creates a binary outcome. Protocols ossify without consensus to upgrade, or get captured by massive token holders serving their own interests. Neither paradigm currently scales institutional capital. Traditional finance traps money in silos, and decentralized networks expose it to systemic capture. Both carry a massive load of multi-party coordination debt. Resolving this debt requires a new architectural layer, the Financial Services Wise Autonomous Organization, or WAO. The Financial WAO functions as a neutral, permissioned trust infrastructure. It provides a coordination layer that sits above banks and exchanges without requiring them to abandon their existing operational models. The core of this system relies on autonomous AI agents. These agents execute cross-institution coordination, routing data and verifying transactions without centralizing control or exposing a bank's proprietary records. These agents take over the mechanical labor of data reconciliation and compliance. This allows human professionals to shift their focus back to high-level strategy and risk assessment. This framework establishes the necessary architecture to combine the settlement speed of decentralized networks with the systemic stability of traditional banking. The build-up starts with the bedrock of the system, the Wisdom Vault. This horizontal plane represents a shared environment for institutional memory. Shared ERP systems have failed in the past because banks refuse to hand over competitive data. The Wisdom Vault acts as a strictly permissioned environment where institutions only share what is necessary. Banks contribute verifiable states, like settlement confirmations, to this ledger. Cryptographic filters strip away identifying markers, ensuring the vault contains facts without exposing client privacy or competitive alpha. This neutral substrate provides the context that AI agents need to route information between silos. Because the data is standardized and verifiable, the agents can act on it without a human intermediary. Creating this permissioned data environment is a prerequisite for the WAO. It eliminates the information asymmetry that historically made financial coordination too expensive to maintain. With the vault in place, we deploy the first specialized application, the KYC and AML orchestration agent. This agent maintains a portable cryptographic compliance record for clients.
With consent, the agent's key orchestrates verification across all banks instantly, eliminating the need to submit paperwork to 5 different departments. This synchronization resolves repetitive verification, attacking the $50 billion redundancy tax and accelerating onboarding. Moving to portable, agent-driven identity orchestration removes the primary operational redundancy of traditional banking while increasing the accuracy of regulatory oversight. Security has long been hindered by a similar barrier. Banks are often unable to share fraud signals because of privacy laws or the risk of exposing proprietary customer profiles. The WAO deploys a fraud signal agent to monitor the spaces between nodes. It is designed to aggregate behavioral anomalies across member institutions in real time. It uses zero-knowledge proofs to protect privacy, allowing a bank to mathematically prove a threat exists without revealing client information. By aggregating these opaque signals, the agent identifies cross-institution attacks and broadcasts a network-wide halt signal, freezing malicious routes before settlement. This agent transforms isolated vulnerabilities into a collective defense grid, neutralizing emerging threats without violating institutional privacy. The WAO architecture also addresses the instability of decentralized finance through the treasury management agent. This agent autonomously monitors collateralization ratios and manages protocol reserves across liquidity pools to maintain balance. During a sudden market crash, the agent executes risk parameter adjustments in real time. By dynamically shifting collateral thresholds, it prevents the cascade of liquidations that often destroys decentralized protocols. In a typical DAO, these adjustments would require a slow, politicized voting process. That delay often makes it impossible to act quickly enough to stop a market panic. Real-time, agent-driven treasury management removes this human governance lag, addressing the coordination failures that have historically made DeFi too volatile for institutional use. To prevent this autonomous layer from being captured by a consortium of megabanks or a cartel of large token holders, the system requires a hard failsafe. This is the governance firewall. It is an architectural requirement that strictly bifurcates decision-making. Economic governance is the domain of participants who vote on capital allocation, fee structures, and protocol upgrades. They determine the general direction and economic goals of the system. Risk governance is the domain of an independent council establishing hard systemic boundaries, insulated from economic voting. If a vote attempts to breach a safety threshold, agents use this independent risk logic to instantly override the decision, rejecting the action and resetting parameters. Decoupling economic incentives from risk governance is the only way to guarantee systemic solvency against human greed or panicked consensus. The Financial Services WAO functions as an integrated stack. Data flows from institutions, is optimized by neutral agents, and bounded by the governance firewall. For traditional finance, this architecture targeting settlement cycles and compliance redundancies removes the primary drags on operational efficiency. For decentralized finance, it creates a system anchored by immutable risk governance, providing the stability necessary for institutional capital deployment. The WAO removes the forced choice between the safety of regulated silos and the speed of open, programmable networks. The growth of global capital markets depends on the shift from programmable money to programmable, rigorously governed institutional trust.